In today's video, our mortgage experts are going to break down for you what you're going to need to do in order to get that next deal.
We want to talk to you guys about what it's like to buy real estate in 2021 with this really strong hot market and essentially a seller's market that we have going on. We're starting to see properties go for 100, 150, 200, and there's even some homes going for $300,000 over asking.
A lot of people have missed out on unemployment. So whether you were a non-essential worker for a short period of time or an essential worker and had to take some time off to take care of a loved one, the income that is being supported in 2020 is going to be very different than your 2019 and 18 T1 and NOA.
What is up, YouTube? Matt McKeever here, and in today's video, Josh and Ehren sit down and break down for us their opinions and their perspective on what it's going to take to put together a deal in 2021. I know a lot of you are really excited to jump into the real estate market or get your next deal, and in today's video, our mortgage experts are going to break down for you what you're going to need to do in order to get that next deal.
Perfect. Thanks for the introduction, Matt. Hey guys, obviously Josh and Ehren here with the Findlay Mortgage Team. Like Matt said, we want to talk to you guys about what it's like to buy real estate in 2021 with this really strong hot market and essentially a seller's market that we have going on. There's a few things we want to touch based on, starting from the very initial stages of applying for a mortgage and putting your offer in and potentially going firm, and what going firm looks like and whose responsibility is. So we'll just get started and jump right into it.
Yeah, so let's just quickly talk about the current climate that we are in. A lot of clients reach out to us and they obviously are looking to either purchase a rental property or purchase a home, and they are in a situation where they need to make an offer, and odds are you're going to have multiple offers you're going up against. Now, every single real estate agent is going to tell you to be competitive, you are going to want to have no conditions. Obviously, as mortgage brokers, we can't advise you to have no conditions in an offer. No conditions obviously comes with risk, and with risk, you have to scale and you have to realize, how much risk are you willing to take, and what does no conditions truly mean. And it's our job to be able to ensure that you understand what the ramifications are of your actions if, for example, you would like to go in at no conditions. So what we want to do is break down today, as Ehren said, some of the risks involved, what it means to go firm, how it could affect you in your financing, and what that looks like.
So first thing, why is the market so hot right now? The market's so hot right now because there's super low inventory. I mean, we're 1 month in, or I guess going into month 2 in February, and there's very little inventory on the market. This low inventory creates a higher demand for housing, and people are willing to bid more to get into a property, and that's what we're seeing. We're starting to see properties go for 100, 150, 200, and there's even some homes going for $300,000 over asking. Something that's talked about a lot is going in clean, having no conditions. And I think the big thing here is, as much as us realtors or us mortgage brokers and our realtors work together, our job is to kind of protect the financing side and just let you guys know, all the risks and things that can happen with going in on no conditions. I think a big thing to remember is that, even if you go firm and you get a commitment from a lender, that lender is able to back out of that commitment up until the day of closing. So if anything along the process happens that lender is no longer comfortable with, even a day before funding or the day on funding, they can pull that funding and not close on the property for you. So keep that in mind, that a lot of people ask, hey, can I go firm? When's the best time to go firm? That's a decision that the buyer has to make. And us as the mortgage agent, what we'll do is we'll provide you with as much documentations and information to support your decision, but we can't make that decision for you guys. That's something that you guys have to make on your own decision.
Yeah, so let's dive into one of the first really important aspects of going firm or making an offer in this market, being value. So if you are in a position where you'd like to make an offer on a property, let's just say easy numbers, $1 million property, and that $1 million property goes for $1.3 million. So you go firm on 1.3, it was listed at $1 million, and you say, Josh and Ehren, I want to get a mortgage, it's worth 1.3, I bought it for 1.3, it's got to be worth it. What we'll do is we'll already have your file underwritten, but we will have to order an appraisal. Now that appraisal If that appraisal comes in, say, at 1.1 million or 1.2 million, a conventional lender is only going to give you a loan based off of the lower of the two values, either the purchase price or the appraisal, whichever is lower. So if you are purchasing that property for 1.3 and it comes in at 1.1, not only do you have to come up with the 1.1 down payment, you need to cover the $200,000 extra to be able to deal with that purchase price that you guys went firm on. Now, unless you have the bank of mom and dad or grandma or equity in another property or a bunch of savings, one could see how that would be extremely risky. It's important to note that your real estate agent isn't going to get you out of that situation. Depending on how much cash you have, your mortgage broker can't get you out of that situation. Your lawyer can't get you out of that situation. Firm is firm. You're signing a legal binding document of purchase or sale with another person, guaranteeing that you're going to be purchasing that property for what it is. So number one is value. We need to make sure that in a climate like this, if you're setting a precedent in a specific area and you buy the most expensive house on the block and all the houses haven't sold, or there's no houses or comparables that have sold in that area for that price before, you may be in a situation where there is no other comparables at that sale price. And if that's the case, you could be in a situation where your value, it just isn't going to come in, and the lender's not going to be willing to lend you money based off of that new purchase price that you've set. So mitigating risk by value is something that you should always keep in mind when going above asking on a purchase.
And another thing to keep in mind as well too, and can be really important, is making sure you're working with a realtor who is either from the area or has a lot of experience in the area. We have seen some buyers work with some realtors that have migrated away from the GTA and have come into the Kitchener, Windsor type markets, and which is fine, but I mean, if they don't understand the market, it can be hard for them to determine the value of the property and whether or not prices are too far over asking. Obviously, having, like Josh said, very strong comparables is a really great idea. And if you're looking to put a bid in well over asking, ask your realtor for the comparables. Say like, hey, I don't have any problem doing this, but show me the proof. Let me know that I'm going to be secure with my offer, and there's going to be a really good chance of having the appraisal come in on value, so that you're not left covering any of the difference. Worst case in that scenario, like Josh said, you don't have very many outs. Unless you have another collateral piece of property in the cash to get into a private mortgage, you're really stuck looking at a potential lawsuit. So just making sure that that value is going to be there is super important. There's a few things that you have to kind of keep in mind that a lender is going to look at when assessing your application. So just take a quick step back and take a look at the process. After you get your, say, pre-approval and you go shopping for a house and you put an offer in, the first thing that we're going to do is get that commitment. That commitment is very conditional, and like I said, at no point throughout the commitment is the lender guaranteeing that they are going to give you funding. They can pull at any time. The lender is going to take a look at a handful of things with your mortgage application, determine whether or not they want to follow through with their funding. They're going to take a look at your income, whether you're on an hourly employee, whether you're a salary, whether you're a business for self. There's going to be certain documents and certain underwriting procedures that they're going to need to ensure are in check before they approve those conditions. They're going to take a look at your credit score. Just because you have maybe a good credit score that falls within the guidelines, are there things within your credit bureau themselves that the lenders are going to take a look at and see as red flags? Do you have any consumer proposals? How soon after those consumer proposals are you? Have you been discharged? Are you still within your consumer proposal? Have you been discharged but you're still within the 6 or 7 year time period that it's going to stay on your bureau? That could definitely affect your ability to get funding. And same with bankruptcies. Have you completed it? Have you been discharged? Are you within that 6 to 7 year time frame? These are all things that the lenders are going to take a look at. Have you missed any payments in the past? You can have an 800 credit score, but if you've had some consecutive missed payments, mortgage payments in the past, lenders are going to see those, and that's definitely going to be a red flag from the lender in terms of wanting to fulfill your loan and move forward that way.
Yeah, so touching back on income too, it's important to realize that we're in very precarious times. So, a lot of people have missed out on unemployment. So whether you were a non-essential worker for a short period of time or an essential worker and had to take some time off to take care of a loved one, the income that is being supported in 2020 is going to be very different than your 2019 and 18 T1 and NOA. Now, if you're an hourly employee, it's important to realize that most lenders are going to require your 2020 end of year pay stub. Now, if your 2020 end of year pay stub shows or reflects a lower amount yearly in income compared to what your 2019 and 2018 T1s were, you have to use the lower of the two when you're looking to average out the income amount. Now that could obviously affect your overall qualification. So, a handful of things to take into consideration. If you had a lapse in work, but you're back to work now, that's still going to reflect on your T1 general or, your new 2020 pay stub, which really is going to overall affect your qualifications. So, it's important to take a look at the current numbers that you have and not just the 2019-18 because, it could be drastically different and affect your numbers. And if that's the case and you went in firm, there's nothing you can do about adding income other than adding a co-signer, which are all things to take into consideration. Yeah.
If you're worried about having a condition clause, like a financing condition in your purchase and sale, there are some other ways that you could word the conditions to kind of help you get out and have an escape clause at the end. We actually talked about this with Sean Quigg the other day in our live stream, where he talked about having a due diligence clause at the sole discretion of the buyer. That's something that you could definitely talk to a lawyer about if you're looking to not sneak a condition in there, but have something a little bit less obvious in wording, but still be able to protect yourself. That due diligence clause can cover a wide variety of things. So that might be a good suggestion if you're looking to kind of move forward and put in a firm offer on a property, but still looking for a bit of a safety net at the end. So if you guys are looking for more information on that, definitely check out our last video or reach out to Sean and ask him some questions.
Touching on safety net, one of the last things we want to touch on is a plan B. Going firm takes a lot of risk on the buyer. Having some sort of plan, whether that is savings, the bank of mom and dad, as we said, collateral property, a way to be able to tap into a large amount of capital to be able to make sure that you can come up with the down payment required is definitely something that you're going to want to have if you are going in no conditions. The last thing we want to do is have you guys in a position where you have to come up with a very large amount of money that would become almost impossible for some people. So it's all about risk mitigation, guys. We represent you. We also represent the lenders, and the lenders are going to look at all your documents, and they are going to make sure that they are lending on the true value of a property, and they're going to make sure you can qualify based off of your current numbers for that property. So risk mitigation, having a backup plan, making sure all your documents are in order are all things that you can do to mitigate the risk going in firm on a deal.
And again, guys, we just want to stress that, as your mortgage agent and broker, we can't tell you to go firm. That does have to be a decision on your own. Like I said, it's our job to give you guys the most amount of confidence to make that decision, but in the end, it does come down to you guys and your ability to go firm. Whether or not you have a commitment, like I said, throughout that commitment process and the condition process, the lender can pull out at any time. So if there are anything that you guys think there could come up to be a red flag, make sure you just disclose all that stuff at the front. We talk about this, but we ask for all the documents up front to make sure there aren't going to be any hidden red flags and last minute issues. So again, just make sure you guys are fully open and disclose everything with us before going into the transaction.
Yeah, again, if you have any questions at all, please feel free to reach out to both Ehren and myself. If you haven't and you're watching this on Matt McKeever's YouTube channel, jump on our YouTube channel, hit the subscribe button. It's really going to help us to grow our following and to be able to create more content for you. If you have any questions about this specific process at all, reach out to us or leave a comment below in the chat and we'd be happy to help you out.
Thanks again to Josh and Ehren for taking the time to shoot this video. If you guys got value from this video, smash that like button. Hit subscribe if you're new to my channel. I'd love to hear what other discussions should we have with Josh and Ehren on future YouTube videos. Let us know in that comment section, and we'll see you in the next video.